1 in your agenda, which is the Auckland Council Group Financial and Service Performance, and the officers are just coming forward at the moment. So just while they're doing that, just a reminder that the purpose is an update on the financial and service performance results for the 6 months to the 31st of December 2025, i.e. a quarterly report, and for the month of January 2026. So we have Michael Burns, General Manager of Financial Strategy and Reporting, will be presenting along with the Manager of Group Performance Reporting. Is that right, Michael? So will you lead in? Okay, thank you.
Thank you, Chair. Yes, so I'll just speak briefly to the report, and then Karina's ready to answer all your questions.
And Michael, I understand we've got Justine online as well.
Yes, if that's helpful for our questions. So this report presents the quarterly performance report for the period to 31 December last year, and the monthly financial dashboard for January 2026. These reports follow the release of the group's interim report, which was released to the NZX on the 27th of February. Now, the release of that interim report and the requirements around that is why this the quarterly report didn't come to the last Budget and Performance Committee. So due to the timing of this meeting, however, we did distribute these reports earlier to you by email on the 6th of March. So the quarterly report shows capital investment of almost 1.8 billion in the first half of the year, in part funded by $553 million of additional direct borrowing. This, along with an increase in book valuation of our foreign currency debt, brought total group debt to at the half year to 15 billion. This equates to 18.2% of assets and a debt to revenue well under our targets of around 228%. In terms of operating performance, the council group showed strong positive position against budget, with direct revenue 50 million over budget and direct expenditure 87 million under budget. The monthly report for January continued these trends, with capital investment reaching 1.999 billion and still at 81% of budget, and net direct expenditure favourable at $130 million favourable. So over the two reports, in terms of direct revenue, we're seeing a really busy time in consenting, and particularly in requests for LIMS and property files. So that may be reflecting either a busy or maybe a particularly cautious property market and property buyers out there. This is offset by some lower public transport revenue, partially as the result of people taking up the use of the $50 caps, weekly caps, and some lower water revenue at Watercare due to the higher rainfall. Direct expenditure results are favourable. Largely that's due to timing differences with the budget, but that's partially offset by some additional maintenance spend as a result of bad weather rainfall events. In terms of service performance, we're seeing really good results in our libraries, with 4.3 million visits in the 6 months, which is the highest we've had for 5 years. Our animal management business our animal management response targets are still below budget, but are significantly improved on where they were this time last year, so we're seeing great improvement there. The one other kind of key performance measure to note is in the waste space, with our food scraps diversion not reaching target, notably below. That is driven largely by participation in the scheme, and the team are working hard to improve that. So with that, I'll just leave it there, and we're ready to take your questions. Thank you.
Very good. Thank you for that, Michael. So are there any questions? Yep, there is. Thank you, Your Worship.
There should always be questions. This is quite a big report, and there's a lot of work. And are you going to go any of these slides in this bit here or not? No, it's really, but it's actually, there's a lot in it. It's well presented, and it's for a quarterly report. It's well, but it's kind of written in a good news way, which is, you can't blame them. And there's quite a lot of good news in here, but there are some things that aren't, and I think we should be. It's good that you raised the thing like the green waste, and we have had a habit of over-promising the good sides of things and under-delivering on them, and I know that Councillor Williamson is alive to the number of cyclists that we've promised to have, and they just haven't arrived. And those sorts of things there need to be highlighted. So it needs, you know, we should, I know that's nice that you're trying to make us all look bloody good all the time, but I think we need to be pretty brutally honest in these things. And for instance, I was looking at the waterfront development, Auckland urban development on page 27, I think. As a pointed stride, probably is preferred, but it sounds like amazingly good news for handing over a whole pile of land for 125 years for $17.5 million, which is kind of like a ludicrously bad decision. And so when we have these ones, we should perhaps present them in saying something not, I don't want to make it overly negative, but a bit more neutral about it, sort of saying, well, you know, this was this transaction will be checked or something like that. I don't want to put just on that, but you've got other ones where you've got bits of white and bits of red, and it's quite good that you're doing that sort of stuff because, you know, it isn't all perfect. It's pretty good overall. And then the other bit I wanted to ask, so is, can we have just somebody reread these ones and make sure it's not too glowing where it doesn't need to be. And then that we are spending a lot on capex, and the debt is rising pretty. $883 million is probably, it's, as you say, it's within our debt to revenue ratio. 18%. But can we actually have something stating that we absolutely categorically that went on capex? None of that drifted into OPEX, because it shouldn't. And I want to have statements to that effect so that people understand that what we are borrowing for is future assets, and that we are actually expecting those future people to start paying some back. So we should at some stage in our things be pointing out that we are slowly paying back for things that were bought and borrowed for some time ago, because it is getting up. And so I want statements to say that these things are categorically not involved in OPEX, and we are, everything should basically have reds and greens. If it's all green, then no one will believe that. That'll be just as mad as the Greens' own financial policies. There's got to be a few reds in there. Otherwise, if there aren't some reds in there, you're not pushing yourself. So, you know, levels of service for the pump station for one, you know, I can live with that. Those sorts of things, it shows us are trying hard. So, my two questions are: can we make it a bit less unneutral, and can we have statements about the debt that's a bit more than just saying it remained below the long-term target plan? You know, I think we're going to have, we will want to have a big time going through debt and its growth over the next long-term plan. It'll be something that I'll be talking about, because we can't have a long-term plan that just goes up and up and up forever like America, because we don't have the capacity to bomb people into submission. Okay.
I think the answer to both of those is yes. We can look to add more reds and greens, be a bit more neutral, and have no problems confirming that all of our borrowing is within our policies.
There should be a standard statement that this is in no way are we borrowing to operate, you know, and it should repeat and repeat rinse and repeat, so people get that. Otherwise, we're saying, yes, borrowing. Well, thank you very much for that.
Very good. Thank you for that. Councillor Turner.
Thank you. The debt to asset ratio, that our debt ceiling, that's what it is, correct? The debt compared to asset ratio, is that the debt ceiling?
No, our debt ceiling's around our debt to revenue ratio.
But when I was looking at this stuff here, we do compare it. I hear you regularly compare our debt to the value of our asset and say that it's not. That what's that measure called?
So it's just another measure of our debt, but yeah, debt to assets, and they're the one that I mentioned earlier at 18.2%.
So our water care assets are included in that, even though we've separated our balance sheets?
That includes both Watercare's debt and their assets.
Just sticking with the assets for now, from what I tried to work out, about 61% of that asset is underground. Is that correct?
I'm not across those figures.
Okay, well, I worked out at 61%. I don't know if I'm right or wrong. It'd be good for you to test those figures. But is it correct to say that calling that an asset is dangerous due to the fact that really it's a liability, a long-term liability at least? And if we took that out, it would change that figure significantly, wouldn't it? It would change that calculation.
I suppose in some ways, any asset needs to be maintained and looked after and renewed over time. There are assets in our books in that they continue to deliver service potential, and that they can drive service. It's important that we recognise them as assets. That way we can ensure we depreciate them, we look after them, and maintain and renew them.
Okay, our depreciation, 100% funding of depreciation is a bit of a different subject. All I'm trying to do is back up the mayor a bit about the fact of where we're going with these borrowings and compared to what and how we can justify it. But the last question, because you just raised it there, so Watercare has borrowed 13.5 billion, or will do over a period of time, and of that, 4.5 billion is going to come back to us, correct? And it makes no difference to the overall group balance sheet because one's offsetting the other, right?
Correct.
So, but it is real dollar transfers happening, isn't it? There's real money coming out of Watercare's accounts and being deposited into ours, correct?
Yes.
What's it being spent on?
It's being used to pay down the parent debt, so that it reduces the need for the council to borrow for its capital program, the capital programs of those we support with debt, such as Auckland Transport.
Yet our overall debt is still rising.
Yes.
Thank you.
Yes, I guess just to clarify, not because of that debt transfer. So essentially there's 4 billion of debt that Watercare has raised through the council. They'll go and issue $4 billion of debt in their own name, and that transfers across and basically pays down council's debt. But at the same time, both Watercare and the council are investing in assets and increasing their overall debt levels.
What I'm struggling to understand is that I'm told those real dollars are being spent because our debt is going up, whether it be slowly, even if it's only by $1, it's going up. So that money coming across is being spent. And I'd like to know on what.
The money coming across is just a transfer of Watercare debt to council debt. It's refinancing debt that is separate to, as a group, we're borrowing, both parties are investing in more capex. So it's not, there is no increase in debt because of the transfer. There's an increase in the debt separately because of the capital investment.
Thank you. I've been doing the best I can to research and learn about this and not waste your time and the time here at this meeting, but the one message I am being told clearly by the people, the learned people I've engaged with is, it's real money, Ken, ask where it's going. So I'll keep coming back to you on that as I work out what I'm trying to say. Thank you.
Are there any further questions? Yep. I'll go to Dave and then to you, Morris. So,
Thank you. Kia ora, Mr Chairman. Just on the Māori outcomes underspend, is there any thing you can put your finger on to say why that's occurring?
I'll need to follow that up and come back to you. We can, yeah.
Okay, because just to follow up that, I know that you're going to come back with a report in April, which talks about maybe redirecting to new projects, but it'd be good to know if the projects that aren't getting achieved or the spend isn't happening, it'd be good to know why that is as well. Thank you.
thank you. Councillor Williamson.
Yeah, look, first of all, something you won't often hear from me. Well done. This is a really good report and lots of detail, and I loved reading it all last night. There's just a little bit to add to what the Mayor said. It says things like, you know, Reeves Road flyover, big capital expenditure, great. And then on page 20, I think, and then that's all it said. It actually should also say is a disaster at present, causing massive problems. AT are out there trying to find solutions. We're up to option 4A, and by July are looking to take away one of the big speed humps and try to get the traffic flowing through. So that councillors here know that it's not just a wonderful thing and we've opened it and then go out feeling happy and merry and gay. The last one I also wanted to point out too, that it's probably not the right forum to be asking details about this because this is a financial report. But on page 58, I have to say my ghast wasn't flabbered when I read about the food scraps. How down we are, dramatically down in terms of tonnage, and how fewer people are actually taking up this wonderful thing that previous council had decided was going to be great for us. It'd be really good if we could have a little bit more information on that food scrap stuff than just what's there. We're working harder to encourage greater households to use the thing. You know, I know it's not you, it's financial report, but if you're going to include stuff about how badly it's going, year-to-date actuals at 23,000 tonnes, way down on what we'd budgeted for. It would be good to have an idea of specifically what that's costing us. I understand the guy running the truck is in huge financial trouble because it's not even coming close to the tonnage he needs to make it a viable proposition. It's in close to being in really difficult financials. It could be a big bailout money sum for us if things turn to custard there. And just the way it's presented there is too shallow. It's just it's down a bit, move on, and it's just buried on page 58. But otherwise, you made an old man's heart very happy to see a good report.
Thank you. We do have Justine online if there's any specific questions on that, or would you just rather we came back to you with some more detail?
I mean, it's really, this is a finance report, and this just says, oh, the tonnage is down. But there have got to be real implications for that because it's been a long-term down compared to what the business case was. This is my post-implementation review argument over again. We decided all these wonderful things some time ago, and it's not happening. And we've got to work out what's the big reduction in revenue we're going to be getting out of that, what's the costs of the guy's contract that is contracted to have. He's leased a whole lot of trucks from truck rental and so on, still having to pay those. Truck rental is saying, you know, you still pay us. So I, as a councillor, I look at that, I have no idea what the financial implications for us being way off target. When do we expect to be back on target? What will be the cumulative amount of losses that we're going to have to take over that time? Just reading that, it doesn't really say anything.
Okay, thank you for that contribution. I have Councillor Watson, and followed by Councillor Patterson-Hamlin.
Thanks, Greg. Thanks, Michael. Just a couple more questions on debt, if you don't mind. So 15 billion at the end of last year, December. What are the finance costs, interest costs? Are they the same as in previous documentation? So the 15 billion, about 700 million a year, and then next year when we go up another 1.5 billion in debt, 809 million. Are they still tracking at for 809 million a year in interest costs next year?
I don't have next year's figures, but yes, the finance costs for the year to date for that first half were at 335 million against a budget of 334, so pretty much bang on budget. That total, the full year for this year, budget was at 673 million. We are seeing our forecast interest rates. At the half year, they were sitting below what the long-term plan had projected. So that's quite positive. But I'd have to come back to you on an update for the next year's forecast.
Yeah, so I guess the obvious question people will be asking out in the community is, given what's happening internationally, the attack on Iran and all the consequential predictions for rise in inflation and business downturn, et cetera, is that going to materially impact then on our debt raising? I mean, I noticed for next year it was already going to be like 2.2 million a day, essentially, if it goes to that 809 million figure. So can we expect that cost of raising debt to increase if inflation increases, as many of the experts are saying?
I think it's probably still too early for us to make any clear statements in that space. Our team are starting to do some work on potential sensitivities to fuel price changes and also to what any flow-ons in terms of inflation might be, and then this next degree beyond that would be interest rates. So our team is starting to pull that information together from across the group. As you can imagine, the key impacts, whilst the council itself doesn't have a high fuel cost, our contractors do. And so we're just starting to do some work on some scenario modelling there, but it's probably too early to make any categorical statements for next year.
Okay, just final question. In terms of, refinancing existing debt when that comes up, what's the situation there? Do we have any, big kind of borrowings that are coming up for renewal?
We have Auckland Council has a range of bonds that are coming up for renewal. We've just done some bond raising, and Watercare's just done some in the last few weeks at quite favourable rates with lots of interest in those bonds. So we're not exposed at the moment. We're looking pretty good in terms of any market disruption. It shouldn't impact us at the moment, given the bond raising we've just done. In terms of interest costs, yes, it's early days yet in terms of what oil prices might mean for inflation, growth outlooks, and then interest rate responses. But the other key element is we're well hedged in the short term, so we have lots of protection to moving interest rates in the short term, less so in the longer term.
Thank you. Okay, Councillor Patterson-Hamlin.
Thank you. Just following on a little bit from Councillor Williamson's questions, and sorry, I don't know if this is in order, but Councillor Williams, was it page 45 you were referring to? I got it. Okay, we can deal with that later. I'm going to assume for now it was page 45. Anyway, the financial implications of being lower on the waste target, I'm going to use that food waste thing as an example, but I'm actually talking about the whole report, just because that's the one that Councillor Williamson used. So so the question was about how the cost implications of being behind target go. Is it feasible in a report like this to also feature the cost implications of the savings being made? I know you have that really good value for money section at the start, but I'm guessing 23 tonnes of stuff not going to landfill is probably representing a saving as well. So is that a feasible thing to represent so that we can look at both sides of that coin and assess where we're at in terms of the KPIs accordingly?
It's probably a challenge to model to demonstrate the exact cost implications of all of these. For example, in that one, and I may ask Justine to back me up on this, but the lower diversion to landfill, diversion from landfill and food scraps collection probably doesn't result in a lower cost to council, given our standard, our contracts. And so in many cases, those don't result in a direct impact on our cost base. And so therefore, the projections and the impacts on operating expenditure, I think, are best shown through in that section. Yeah. Justine, are you able to confirm in that space the cost implications of the food scraps result?
Yeah, Maudina, Michael, and apologies, I seem to be having issues with my camera, but hopefully you can hear me okay. So yes, that's right. The collection contracts for food scraps provide for a household rate. So the reduced tonnage does not represent cost savings or additional cost to council, because we have provision for that service to be provided for all the households in the urban setting that receive that service, the same as recycling and rubbish. So essentially we have a standard provision for those bins to be put out on the curbside and for collection to occur every week.
Sorry, just to clarify on that. I don't want to get bogged down in that specific line item, because what I was actually trying to get at was the overall. So is what you're saying that overall we have to take each on a case by case basis, and that kind of modelling is just too unfeasible for a report like this? Is that the answer?
I think it's something we'll take away, because I can see the value in what you're asking there, and we'll have a look at what we can do going forward. I think, like you say, it follows from Councillor Williamson's question, request for more information there, and where we can show those projected cost impacts, we'll look to do that. Thank you.
Thank you. I have some additional speakers. We'll have Deputy Mayor, followed by Councillor Hills. So, Councillor Simpson.
Thanks, Chair. Look, I'm going to help you out here, Michael. Could you please confirm that both the direct revenue and the direct expenditure are both favourable to budget in this quarter?
Yes.
Can you confirm that the operating costs for the group are favourable to budget in this quarter?
Yes.
Halfway through the year, do you believe we will maintain our financial position to be on or under budget?
Looks very promising.
Thank you. I think that's really what I was going to say. I think that's the summary of your group report. Thank you very much.
Okay, thank you. Councillor Hills.
Thank you. I don't know, the Mayor mentioned cycleway numbers being down, but they're actually up and on target. I just wondered where that came from. But the question I have just on the debt, because it seems to come up every single meeting. So I know the answer, but can we just clarify again, because it was kind of left hanging in the air. Watercare's debt we're not getting as cash just to throw around. Watercare's debt moves from, our debt to their debt, but we count the debt as a whole. There's no magic money sitting there for us to choose to do something else with.
Yes, that's correct.
Yes, it's effectively a transfer of debt.
Yeah, but we still count the overall debt, because that's the way the law was set up with the water services entity.
Yes, in the overall group accounts, council owns 100% of Watercare. We consolidate all the numbers into the overall group picture. Although certain metrics we do look at, excluding Watercare for things like our debt to revenue ratio, because that's how the rating agencies look at our credit.
Yeah, so there's no cash to be spent. It's just moving the debt from our books to their books, but we still acknowledge it's everyone's debt to own.
That's correct. Although at the same time, as a group, we're borrowing more debt overall to invest in more capex.
Yeah, I'm talking about two different things. I guess that's the one thing, that we're moving the debt to them, but then we're increasing our borrowing because we're increasing our capital. On that, the 880 something million for this 6 month period, increase in net debt, 330 of that is book value debt, so it doesn't have an OPEX component because of the foreign exchange kind of figure. Could you just explain that? Because our debt's going up 880, 500 of it's because we're borrowing, but 330 is due to the exchange rate, essentially.
That's correct. So we actually took out $500 million of new borrowings because most of our borrowings are denominated in foreign currencies. We need to adjust them back into New Zealand dollars for the sake of the books, and that adjusted it up 300 million. However, we do have those borrowings, those foreign currency borrowings, fully hedged. So that is not actually a cost to ratepayers. It's not money we will need to either repay or pay interest on.
But my understanding is we legally have to show that book value change, even though it's technically not real.
Yes, so that the debt that we're talking about is foreign currency debt. In New Zealand dollars terms, it is true that it is $300 million higher. That's more debt we have to repay, but we don't need to raise any more money because we have hedging contracts that will actually pay us $300 million to pay for that extra amount because we fully hedge the foreign exchange risk.
Thank you. So the 500 odd million, so that's for 6 months. So say if it continued equal for the next 6 months, that's $1 billion additional debt. But that's because that component of our borrowing for the capital, that component of the capital is from debt. There's a whole lot of other things, DCs, cash, depreciation, but that component, say it's $1 billion if it mirrors this last 6 months, that's because we're doing more capital, right?
Correct, yep.
And my favourite question, if we were to do that $1 billion worth of capital through cash or rates instead of debt, is it accurate that would be a 40% increase to rates this year on top of our current rates, 40, if we were to fund that through cash instead of debt?
Yes, that's about right.
Thank you.
Thank you. Councillor Ferry, thank you.
Kia ora, thank you. I've got a couple of questions. First, just reiterating, this is excellent and really well presented, easy to follow. Thank you. I guess I would disagree with the mayor that I think there are quite a lot of reds that I'd love to see turn green because we have achieved the targets. I've got 4 questions. The first is the stuff around customer satisfaction on page 28. Does that include reflecting recovery office stuff? I'm getting sort of a small number of people who are very, very unhappy about recovery office stuff, probably a medium number of people who are very happy, and then other people who are sort of, so are we counting that in those stats, or is this really more about those day-to-day business as usual queries?
Thank you for the question. That's right, it is more around the service performance.
Yeah.
What I will do, however, is check to see if we are measuring that as well separately. So I'll come back to you on that.
Great. I think it would be really useful to capture as we come to the end of that process for most people. Yeah, thanks. Page 36 refers to the Auckland Future Fund income being significantly lower. Now, obviously, we've had Auckland Future Fund in front of us on this, but is there, it mentions there about the delay in the, I can't remember the global something, from July to November, and that's the reason. Is there a plan to catch up on that?
So the key piece there is that because that hadn't been invested, what you'll see is lower return in terms of that revenue line, but some higher finance revenue, so offsetting that. Currently, we're still projecting. I mean, the key thing with the Future Fund was that it was a long-term targets and long-term averages, and we're still maintaining those long-term targets.
Great.
So,
I mean, obviously, we have this huge global uncertainty at the moment, so, acknowledging the long-term nature of it, I just wanted to understand that specifically. Thank you. Ports of Auckland on page 37, and this speaks to that international uncertainty at the moment. Are we expecting something from them at some point? Sorry, this isn't really a quarter two question. This is more of a quarter two is obviously potentially going to be, things will look quite different in quarter three, probably. So are we working with them to better understand what the impacts of that might be? Their income is really important to us, obviously.
So the work that I referenced earlier about sort of scenarios and potential impacts will be across the group, and that will include Ports of Auckland, and we'll be discussing with their team what they're seeing in terms of their revenues and costs, and we'll be looking to build that up at a group basis, on a group basis.
Thank you. And finally, on the food scraps target, and this is probably a question for Justine, so I really appreciate her being available for this. So the target's on page 45. Sorry, I need to get new glasses. I keep having to squint at the numbers. They're not too small, I just can't see them. Yeah, I know, I can zoom, but I just resent it. I'm getting old. Are these targets that we're seeing on page 45, are they, and I notice they are LTP performance measures, are they based on us having shifted to fortnightly by now for the waste collection, or are they not taking that into account?
No, the target for the current year is not taking into account fortnightly, because if we had made that move, it would have happened in a subsequent year. That does mean we need to review the forward-year targets, though, to take account of that decision.
Okay, and obviously we have that coming to us, I think, in June or July, the implications of that change and approach to forthcoming
which
targets.
then,
Sorry.
Yeah, apologies.
Yep.
Yes, that's right. So that then enables us to make sure we're clear on the link between any decision made in June or July in relation to the forward targets for food scraps.
So is it fair to say there's a risk that we will get worse in this space?
No, as per the commentary, we are underway on a participation pilot to lift participation. So we certainly are not working towards reductions, but we did anticipate an increase in target as a result of a move to fortnightly. So that's what we need to reassess based on the decision later this year.
Yeah, sorry, I should have been clearer there. I didn't specifically mean the food scraps target. I meant both of them together. So, I mean, obviously there is, as Councillor Patterson-Hamlin pointed to, a relationship here that the more that goes to food scraps, the less that's going to landfill. So, sorry, I didn't mean to imply that the food scraps would get worse. My concern is that the tonnes to landfill gets worse, partly because we haven't shifted to fortnightly, but also because of concerns around the food scrap service. So that's the risk I see coming, but obviously we have to have that discussion in July. Thanks.
Thank you very much. Are there any further questions in the room? Okay, there being none, thank you very much for the presentation. Look, team, I'm going to do something a little bit different right now, and that's before we go into any comments or debate, we do have, I think we should acknowledge the hard work, time and effort that our lead councillors put in on with the CCOs. So this is a Budget and Performance Committee meeting. Those lead councillors do report more formally through to Daniel's committee, the Appointments and Performance Review Committee. However, it might be helpful, and it's not compulsory for them, but hopefully you've all had a heads up as lead councillors, an opportunity from a finance and performance point of view, just to highlight anything that you'd like to from the report or add any other observations that you might have made as representatives on those CCOs. So hopefully that might be helpful, and we'll just see if that adds any value to everybody. If it doesn't, we won't do it going forward, but if it does, we'll continue the practice. So let's see how we go. And just for the benefit of the public, the lead councillors we have, on Auckland Transport, we have actually two directors, Councillor Williamson and Councillor Henderson. Tamaki Regeneration Company, we have Councillor Bartley as the lead councillor. We have on the Auckland Future Fund, Councillor Fletcher. Ports of Auckland Limited, we have Councillor Filipina. On Watercare, we have Councillor Turner. And on Tātaki Auckland Limited, we have the Deputy Mayor, Leslie Simpson. So I might just open up with between Councillor Williamson and Councillor Henderson if there's any, just highlight reports. It's not a written report, just a verbal update. Anything helpful to the committee?
Yeah, Chair, look, there's not really a lot to say on the financial side. There's a huge amount on organisational side and transition stuff and so on, which other committees will be getting reports on. But right now, I don't have any numbers other than what you've already got in there about Auckland Transport's capital expenditure and so on. It'd be wasting the committee's time to brief, I think. Yeah, Councillor Henderson agrees on it.
Yeah, pretty much, yeah.
Okay, that's fine, thank you. I might next go to Tamaki Regeneration Company to Councillor Bartley, if there's any points.
Oh, thank you, Chair. I suppose financially, I don't have any information to share, but the crux of the speed at which housing is being built in Tamaki really relies now on the direct relationship between Tamaki Regeneration and Auckland Council, because Kāinga Ora is now out of the picture. So, yeah, I suppose the reporting back is that building is happening really fast in the area, and it's good to see both Council and TRC working closely together to make that happen and to take care of what happens underground in terms of infrastructure. So, yeah, that's what I have to report. Thank you.
Very good, thank you, Councillor. Auckland Future Fund, Councillor Fletcher.
Oh, thank you, Chair. I don't think there's anything I need to draw to your attention. We are all well aware of the volatility of international markets, and therefore it is very rewarding for us to know that our directors are acting in a very considered and careful approach. In terms of the distribution for the Auckland Council, that is separate in terms of the initial capitalisation, so there should be no impact whatsoever on the expectations for our finances going forward. Thank you.
Thank you, Councillor. Ports of Auckland Limited, Councillor Filipina.
Ata Māori he mana. Good morning, Chair. Ata Māori koutou katoa to us all. In regards to the Ports of Auckland, I think what I need to firstly cover off for those that may not know is that the Ports of Auckland is 100% owned by us as an Auckland Council Board operator as a commercial company under the Port Companies Act 1988 as a council and not as a council-controlled organisation. Need to put that there clearly because I've met with the board, I've met with the CEO, and the board have decided that from my perspective as liaison, I will not be invited into their meetings, which is fine with me. And so I have now going to organise regular meetings with Roger, the CEO. I've already had discussions with him from January in regards to where we go with this. I've been there twice already, visited the board with their meeting, firstly on the 24th of February. There was a burgers with the board that I got invited to, and then met with the board and the CEO. And from a financial perspective, it didn't cost me anything for the burgers. And then on the 11th of March, myself along with Councillor Short attended the Pacifica Day at the ports, and it was the Kiribati community acknowledged. So I then had the opportunity to also meet again with the CEO and the board. So, Chair, my last comment, because I'm not going to mention anything that's been put in under 8.1 around the ports. I will, however, just say one thing, and that is from a financial perspective in regards to the Ports of Auckland, is that it's on track to meet its full year targets, including $95 million profit and a $52 million dividend to council. So look, from a financial perspective, that's it, but you'll be getting a fuller report to Councillor Newman's committee. So that's where we are, and just want to acknowledge Chris Levitt from the CCO team, and we are working closely. And the last part is that there's no surprise policy, so the Mayor is definitely kept in contact around no surprises and the reports that come out of the port. So there you go, kia ora.
Thank you very much, Councillor. That was very interesting. Okay, water care, Councillor Tuna.
Thank you, Mr. Chair. I think my observations are a lot of financial implication. Water care as a board has got to grapple with several bosses. That's one of the things that is quite obvious when they've got the water regulator and they've got the Commerce Commission, all with input into the board structure or into the board operations, and then they've got several political suitors, including the government, who's, because they see them as shovel-ready with a bunch of money, putting pressure on them to help activate the economy by getting work done. And I think that's a problem, you know, that no good deed goes unpunished. They're there to deliver for the city, not for a wider objective. They are struggling to fit their CapEx requirements within their new borrowing limits, is my observation. And a big reason for that is that they're such a an operational, physical CapEx provider that the limit, the amount of the dollars that we invest in that are eroded away to non-productivity is starting to be recognised by that board as a problem. So by that I mean those very real other considerations, but are turning into parasitic industries of their own, which means that of every $10 we put up for CapEx, we only get, I don't know, 4, 5, 6, 7, I don't know the calculations, but we certainly lose a lot to abstract considerations and not to the investment we keep telling all Aucklanders they need to make. So I am quite open and concerned about our ability to live going forward as a family. Thank you.
Thank you, Councillor. And finally, Tātaki Auckland Limited, Deputy Mayor Simpson.
Thanks, Chair. From Tātaki's perspective, I just back Councillor Filipaine. Councillor Newman gets the more detailed report as part of that. But from a financial perspective, noting that this is a Q2 report, in December 2025, Auckland Film Studios was sold to part of Zytec, and that settlement happened in February this year. The sale protects $30 million of government funding for reinvestment in the new screen infrastructure, and that will support future growth in the screen industry, so that's positive there. Tātaki also confirmed a $5 million capital grant towards Auckland's Tennis Auckland's roof project, which was in consultation with the government and tennis themselves, and now that's going to be, that's in place at the moment. That big upgrade, $50 million upgrade is happening. The council has provided Tātaki with a $30 million events underwrite facility, as you know, which alongside central government announcements of short-term funding will enable Tātaki to drive the major event activity in the short term. However, another plug here, Your Worship, the long-term sustainable funding for major events still needs to be resolved, and Tātaki continues to push along with ourselves for a national bed levy to enable this. From their revenue perspective, slightly behind budget on Q2, We had very strong results from the performing arts, but that was offset by a slightly weaker performance at the art gallery and the zoo, but that goes up and down. The zoo, of course, has had car park groundworks and had some bad weather there in December. On the expenditure, that's favourable by 1.1 million. That's really just around costs, timing of costs. But they're in a good position, doing very well, and I enjoy being their representative.
Thank you very much, councillor. So look, what I'll do is email each councillor and lead councillor personally and just find out if you thought that was a worthwhile exercise we just ran through with those presentations, and I'll welcome your feedback. All right, we have a resolution up on the screen there to receive the council report. Would somebody like to move that? I will. Okay, Deputy Mayor, seconded by Councillor Williamson. I'll put that to the vote on voice. Oh, sorry. Thank you very much. Yeah, but keen off the mark there, wasn't I? Yeah, any comments? Okay. All right. Okay. Well, there being none, I will put it to the vote on voices. All those in favour, please say aye. Aye. Those against? Any abstentions? Declare that carried. Thank you very much. We'll move on to the next item, which is the presentation from the Eden Park Trust Board. You can come forward if you like, Nick. I'll just, while you're doing that, I'll run over